Well, hey everyone, it's time to get excited about stock options. I finally built a stock market algorithm and we have a plan and we're doing some work this weekend. Get excited. So this video is designed to show you what I'm doing, and I'm going to be publishing another video by Monday. And the video on Monday is going to have all these stocks. There's 1900 or so, but there's going to be less than that. It'll probably be somewhere between 1,000 and 1,500 stocks. All stocks with a price of $25 a share or more. Only stocks more than $25 a share. And what I'm doing is I'm gathering information about the stock options that are available on these companies. And I'm doing a formula that rates them and ranks them. And I'm going to explain to you what that formula is and how that formula ends up being what we sort by in our table to show us what the best companies to buy stock options are for next week. That's right, just next week. We're going to do 1 week options. We're going to test this out. It should be a lot of fun. So let's explain what's happening. Nobody knows if a stock is going to go up and down. Don't listen to anyone who says they know something's going to go up or down. Nobody knows. The market's volatile and there's lots of different news that'll happen at any given moment. So even though we can make longer term estimates, educated guesses about whether or not a company will go up in the long run, nobody really knows if it'll go up in the short run. But you can make a lot of money in the short run by purchasing stock options and playing the volatility. I noticed that this week as I started doing this, and I made money this week doing this. First time I ever tried it. And so I'm going to explain what's going on, how we rank stocks, and what the situation is here. Let's look at, for example, at the number one stock that's on here so far. I've only done about 33 of these companies. I have 1,900 or so to go. So we're only looking at a very, very small sample of high-priced stocks right now. I want to explain what you're seeing here. So basically, this is saying that AutoZone has a 1.7% options rank. And that means that if you buy a call and a put on AutoZone, and you got to know some stock options. I'm not going to explain how stock options totally work. You need to have some basis for that. If you don't know how stock options work, take the class on whatever brokerage you use and understand that there are calls and there are puts. And calls are you assuming that the stock's going to go up, you make money, and puts, you assume the stock's going to go down if you buy a put or you buy a call. I'm not talking about selling options, I'm just talking about buying options contracts. So there's a price for these calls and these puts as shown over here at a given strike price. So it's saying that at the strike price of 2,750, which right now AutoZone is only at 27.29, so they're not there. But the only options tiers for AutoZone were 2,700 or 2,750. So I went with the one that was closer to the actual price, which is 2,750. It costs you $1,400 to buy a call option that expires on Friday, May 19th for AutoZone. It costs you $3,300 to buy a put option on AutoZone at a strike price of 2,750 for a week that expires May 19th. That's a total of $4,700 you'd have to invest to buy both of those options. Well, what happens? Through next week, if AutoZone goes in one direction, away from this 27.29 by $47 or more, you will intrinsically make money on your option. If they close at the end of the week more than $47 away from this, or at any point during the week next week, they move $47 away from this number, you will intrinsically make enough money to be able to sell your option and profit. Let's say they move $75, for example, or say they move $71 all the way up to like 2,800. You'll actually make $2,400 if that happens. They end up $71 up next week. And it goes negative as well because you have the put. So if they just move $71 away from this, you'll make, if they move $50 away, you'll make $300 on your $4,700 investment. So that's the logic of what's going on here, is how far do they have to move in order for your option to intrinsically make a profit based on what you had to pay for your options. That's what this options rank percentage number is. They have to move basically 1.7% in either direction next week for you to make money. Well, I'm gathering all the information for all the companies. The ones that I've done look like this. That's why AutoZone's on top. The one that's in second place right now is Roper Technologies. I've never heard of them, but apparently they only have to move 1.8% next week. And it costs you $825 to buy their options. It's not as bad, right? The options are cheaper because their share price is lower, but it's showing you where the value is on buying those options and playing those options both ways with calls and puts. Well, when I'm done with this, I'm going to do a video and we're going to have this huge list and we're going to have all the companies in order. I am fascinated to see what that looks like. And I'm going to put it to use next week and buy options in some of those companies that are at the top of this list. So this is how it works. For example, let's test this out with ServiceNow. I'm looking on my own source for what the options actually are. Okay. ServiceNow is currently at $455 a share, and they have an option at a strike price available of $455. How much does the call cost? It costs about $940 about. Now there's a range, there's a bid and an ask price, and it varies. So I'm trying to pick something in the middle. This number matters, but we have to kind of guess at it because there isn't really a finite price. There's only a range. So we're putting the range price in there of about $940. How much does the put cost? It costs about $875 or $880 maybe. Okay. Put that in there and you see that ServiceNow's options rank number is 4%. Where does that put them on this list? Way down here. They're one of the worst ones to buy it, to do that, to buy the call and the put on, because this number is too high compared to the other numbers here. All right. That's what we're doing. I'm doing that for all 1,900 companies. That's what I'm spending the weekend on because I'm really excited to see what it does. Next one, LMT. LMT is currently at $450.79. They have a strike price of $450. It's $475 for a call. It's $330 for a put. They're at a 1.8%. Lockheed Martin's a pretty good pick. 1.8 puts them right up here in second place now, right? Well, I'm doing that. I'm doing that for all the stocks. And you'll see the video that comes out probably early Monday morning or late Sunday night. I will go through all the stocks, the best ones to pick, and then we're going to put it into action. So cannot wait to see what this says. It was profitable. I did it this week with companies like Zscaler and AMD, Tesla. I did it with companies like that this week, and I made money on every one except for one of them. I didn't make money with Exact Sciences. It was the only one I lost. I lost about 50%, I think, of my investment. When I did that for EXAS, but everything else won. Everything else did really well, and I have a lot of live options. I made money with Roblox as well doing it. So it's just really a strategy where you're playing off of volatility and you're finding value in the options. You're finding relatively low priced premiums on options, because if this number is low, then that means that comparatively it has the most value. So cannot wait to see what that looks like. I'll get to work, get ready for the video coming out Monday. We will have concrete advice about which options to play both ways, calls and puts. All right. Good luck, everybody. May all your stocks be volatile and your trades be winning.